Hi, Tony here. US equity markets finished last week on a positive note, buoyed by SK Hynix blockbuster debut and investors' willingness to shrug off the latest escalation in the Middle East. Despite the recent flare up in the Middle East, the prevailing view, reinforced by a modest 3.7% rise in WTI futures this morning, is that this is merely an escalation within a fragile truce, not a full collapse of the ceasefire. Whether that is true remains to be seen. Back in the US, this week's calendar is packed. We get earnings season kicking off in earnest with the big banks leading the charge. And then on Tuesday, we also see US inflation data along with Fed Chair Kevin Warsh's testimony to Congress, which will be scrutinized for fresh signals on the central bank's policy path into year end. Let's take a look at the charts of the NASDAQ and the Dow Jones to see how things stand at the start of this new week. Okay, so just to recap, we saw this 35% rally over 9 weeks from the March lows, which took us up to this high here in early June. For the past 5 and a bit weeks, we've seen the NASDAQ correcting that rally, and it's not a surprise given the magnitude of this move that we're now approaching a 6th straight week. In terms of what I'm looking for here is quite clearly a break above this trend channel resistance and above these highs here, which signal that the correction is complete and that the uptrend has resumed, looking for a push up towards 31,500 to 32,000, potentially ahead of the start of the tech earnings, which is still a couple of weeks away. However, if we see the NASDAQ continue to rotate, I'm also open to another leg lower into this support region here. And I think you'll probably see the NASDAQ find buyers emerge looking for a push higher. So overall, the NASDAQ chart still remains constructive to me. We're just looking for confirmation that this correction is complete. And at this point of time, the jury is still out in that respect. For the Dow Jones, we saw a similar rally from the March lows. It took us up to this high here in early June before a pullback, which took us back towards this 50,000 support level into mid-June. And then the rally has continued with a fresh high struck last week up here at 53,294. Now, where I see the Dow Jones is providing it holds above this band of support coming in, let's say 51,600-ish to 51,300-ish. And of course, that picks up the record high here from early June. And of course, this low here from late June, another low over here. Then I think you probably would look at any pullback which holds the support area as being part of a correction within a very strong uptrend. In that sense, I'd be looking for a push above this record high up towards 54,000. Now, if we were to see a sustained break below this trend channel support, then I think it's probably a sign that we're going to see a deeper pullback, initially back towards this 50,000 level, which held back here in mid-June. That's all for this update. Stay tuned for more market updates ahead.